Investment Property, Philippine Accounting Standard Number 40. This is in page 448 of book by Valix, Chapter 21.
Investment property is a property that is land or building or a part of building or both held to earn rentals, which means income from renting the property out to others or from capital appreciation or both, rather than for use in the production or supplies of goods or services or for administrative purposes or sale in the ordinary course of business. It is important to stress that the word held may imply being held by the legal owner of the property or by the lessee under the finance lease agreement. In short, only land and building can qualify as investment property. Yung mga equipment or kahit anong movable property ay hindi siya pwedeng ma-qualify as investment property. And here are the examples of investment property. Land held for long-term capital, basically is a plot of land which is held for will over time gain in market value. Land held for currently undetermined future use. What's interesting is that if on initial recognition, the reporting entity has not determined whether it will be used as land, as owner-occupied property, or for sale in the ordinary course of business, PSA 40 clearly forces the assumption that it is deemed to be held for capital appreciation, and is accordingly such land must be classified as investment property. A building owned by the reporting entity and leased out under an operating lease, or currently vacant building held to be leased out under an operating lease, which will be naturally source of rental income, is another example of investment property. Another example is a building held by a parent and leased to a subsidiary. It can be a building held by a parent or yung masasabi nating main headquarter ng company ay ililis out yung building sa different sub-business units nito. Another example is that the property is being constructed or developed for future use as an investment property. It is illustrated with the example of a developer who is constructing an office building which will be let out to tenants. Even during the construction process, the asset will be already considered as investment property. Ito naman yung mga example or yung type of non-investment property. Yung una, yung property intended for sale in the ordinary course of business. Ibig sabihin, yung mga property na talagang ipinagbebenta under dun sa nature ng business or under dun sa ordinary course ng business activities. Ang sunod naman ay yung property being constructed or developed on behalf of third parties. Ito naman yung mga property na na-construct and property leased to another entity under a finance lease, which would naturally feature in the books of lessee, not the lessor. Na kung saan yung mga project na dinevelop mo at yung kikita dun sa pagpaparenta na yun ay yung third parties. Ang pangatlo naman ay yung owner-occupied property for use in the production or supplies of goods and services or for administrative purposes. Or this is yung mga property held for sale in the production or supplies of goods or services or for administrative purposes nga, which would be naturally considered items of property, plant, and equipment. This is actually extended to all instances of owner-occupied property, including the property held for use as owner-occupied property, held for future development, and subsequent use as owner-occupied property. Recognition principle. Itong recognition principle naman ay yung investment property ay dapat ma-recognize as an asset pag it is probable that future economics benefits that are associated with the investment property will flow to the entity, kung saan dapat yung investment property na iyon ay may potential economic resources na kung saan ay sa future ay magkakaroon ng economics benefits ang entity, or in short, the investment property meets the definition of assets. At yung padalo naman ay yung the cost of investment property can be measured reliably. Per subsequent measurement, an entity must adopt either the fair value model or the cost model as its accounting policy for all investment properties. All entity must determine the fair value for measurement. If the entity uses the fair value model or disclosure, if it is used the cost model. Yung fair value reflects the market conditions at the end of the reporting period. So, under the fair value model, investment property is remeasured at the end of each reporting period. Changes in fair value are recognized in profit or loss as they occur. Fair value is the price at which the property could be exchanged between knowledgeable willing parties in the arm's length transactions without deducting transaction costs. Additionally, dito no depreciation is recorded for the investment property. Then yung net gains and losses from fair value adjustment ay dapat ma-disclose. Under naman nung cost model, yung investment property is measured at cost less accumulated depreciation and any accumulated impairment losses, kung saan yung fair value is disclosed but any change on this is not recognized. Yung gain and losses on disposal are recognized in profit or loss. Additionally, remember that fluctuation in the fair value of investment property from year to year are not recognized. Only the annual depreciation and any impairment of investment property ang charge dun sa profit and loss for the year. And here are some terms to remember. Changing model. So, sa changing model, once the entity has chosen the fair value or cost model, it should apply it to all its investment property. It should not change from one model to another unless the change will result in a more appropriate presentation. Kumbaga dapat, pag nakapili yung entity, maalin dun sa fair value model or cost model, dapat ay consistent na nagagamitin iyon sa lahat ng investment property. At maaari mo lamang sila magpalit ng model na i-apply sa lahat kung ito ay mas magbibigay ng mas appropriate na presentation. Ang sunod ay transfers. Transfer to or from investment property should not only made when there is a change in use, wherein when an entity decided to sell an investment property without development, the property is not reclassified as inventory, but it is dealt with as an investment property until it is derecognized. Then when an entity uses the cost model for investment property, transfers between categories do not change the carrying amount of the property transferred, and they do not change the cost of the property for measurement or disclosure purposes. Third one is disposal. Disposal, ito yung derecognize an investment property on disposal or when it is permanently withdrawn from use or no future economic benefits are expected from its disposal, or eliminate permanently the investment property from the statement of financial position, na kung saan nga ipagbebenta na ito. Then yung gain or losses on disposal should be calculated as difference between the net disposal proceeds and carrying amount of the asset, and should be recognized as income or expense in the income statement. Compensation from third party is recognized when it becomes receivable.